Hi guys, welcome back to the channel. If you're new here, be sure to subscribe, especially if you are interested in trading minimalist by keeping it simple. Today we are looking at an opportunity on the New Zealand dollar versus the Canadian dollar. It's not a pair which I typically trade, but I believe we might get an interesting opportunity coming on. We are on the 1 hour time frame and we are using three indicators, actually two indicators to build the setup and one more indicator to confirm our setup. Those indicators are available among our suite of indicators and you can test them by visiting the link in the description down below. So the Breakout Pivotal Bars is the one that is coloring the candles, either red, green or blue. The sentiment index is down here and it's telling us the market sentiment, so whether it's bullish or bearish, and its trend over time, and the levels and zones is highlighting for us significant resistance or support levels and their respective buy and sell zones. In this case we have two resistances, so not one but even two, and if we have a macro view over what's going on, we can see that we are clearly in a downtrend movement. So what we are looking for right now is a continuation of this downtrend movement. In particular, I want to highlight this impulse that we got here and the consolidation that we are having right now. Well, technically the consolidation would be from this point from this point on, but this is too steep, so this is not the actual consolidation. I believe the consolidation is more correctly this one. So it's a bit strange, the price action is a bit weirder in this area, but I still believe that this candle right here is still part of the impulse, even though it closed higher here and not lower. But this I guess it's the impulse, still the impulse, and this is the consolidation, and you see that it is nicer. The fact that I believe so is confirmed by the fact that from this point to this point we can draw a trend line on the sentiment index as well, and what this trend line is saying is that the bearish sentiment index, so the sentiment index in red, is getting compressed towards the zero line. So it means that at a certain point here in the future, the sentiment index either drops down, so it breaks down, and the market sentiment becomes more bearish, so we have a drop down on in the price as well, and hopefully we have a setup, or the sentiment index becomes bullish, so the market becomes bullish, it increases, and in such case we would have an upward movement in the price, and in such case I would not be interested in trading this pair, because not only it would mean that the price would move against the macro setup that we have here, but it will also mean that it needs to break one resistance and a second resistance before making its way to the upside. So it's really unlikely. What I see more likely is a trend continuation to the downside, and this is supported by the sentiment index and the overall setup in the market on the price action, and in the fact that the candles are currently red. So if we get a red candle breaking down here, if we have the sentiment index breaking down as well at the same time, then we have a setup. Let's wait and see what happens. Okay, so we have a breakdown in the Breakout Pivotal Bars. The candle is red, so it's a valid breakdown. We also have a breakdown in the sentiment index. It's a tiny breakdown, but it's still a valid breakdown. Maybe you prefer to have a more clear and distinct breakdown. To me, this is enough to be valid, but I mean, it comes down to your strategy, whether you want to take this kind of opportunity or not. I'd also take the chance to comment on an email that I received recently from a trader who were asking, well, what should I do if the breakout candle, whether it's a breakdown or breakout, doesn't matter. What should I do if the candle is blue? So it's an indecision candle. So when we have a breakdown, we want it to be red. When we have a breakup, we want it to be green. But what happens if the candle is blue? Well, it depends. It depends on multiple factors, like for instance, the overall price action before the breakout. Are you enough confident of your analysis of the fact that the breakout will continue past this level? So do you have enough confirmation from the price action that the price will continue in your direction? Then you can of course take the trade. But the point that I will insist on is that it all depends on your strategy. I mean, you are not forced to take an opportunity. So if you believe that you should not trade the blue candles when they break out, you should not trade them, just ignore the opportunity. I mean, the market gives opportunity every single day in every single time frame, so you have plenty of opportunities. So just concentrate on the ones that you believe are the most profitable, are the most easy to trade. Keep it easy, keep it easy, keep your analysis easy. Use a set of simple indicators like the one that we are using here. And when you do this consistently, your trading account will grow over time. So if you believe that a blue candle and an indecision candle, which could mean either trend continuation or trend reversal, does not give enough evidence to you that the price will continue in the direction you are expecting, then just skip the opportunity and don't trade it. Okay, so close parenthesis. We have a setup here and we can definitely trade this setup. So our trade is going to start at this level, around this level here. Regarding the target, well, as you know guys, I just project the impulse, which is the correct way of doing this. So I just project the previous impulse, the same length. I take in this case it's a downtrend, so the highest point in the consolidation, in this consolidation here, I take the highest point and project the same length of the previous impulse to the downside. And so this is going to be the target. Okay, regarding the stop loss, which is the second thing to adjust, well, we can, if you want to be 100% safe, well, not 100% because you are never safe in trading, but if you want to be extremely conservative, you can leave it around here, which is above the highest point in the consolidation. If you want to be a bit more a bit more aggressive, you can set it down here. I think it's the smartest thing to do, because it's not it doesn't mean that we are aggressive, but if we look at the price action here, you see that except for this highest point here, we never had a candle in the most recent price action that went beyond this level. So we just stay a bit higher than this and we should be safe enough for this trade, which results in a 3.67 risk-reward ratio, which is excellent, considering the fact that we are in a major downtrend. We should be enough safe in this trade, and we have all the evidence supporting our analysis, so we can just wait and see where the trade goes. So the trade is making its way to the downside. We are almost halfway into our target. What I did in my trading account is that I moved the stop loss to break even around this level here, so that in the worst case scenario I will not lose any money. So I'm right now in a risk-free trade. I just need to wait and see what happens. If we get to the target, then we make a 3.7x return. If not, we will still end up with a very tiny profit, but still a profit, and most importantly, we will not lose any money. So let's wait and see. Okay, so we are a little bit unlucky because we almost touched our target, but unfortunately we didn't, and the price is retracing a little bit. Let me extend this so that it's clear. Okay, so we barely touched the target, but we didn't, so we must wait a bit more. The write down was kind of gentle, it was not very impulsive, so it might take some more time if this is the kind of price action that's going on, but we should still reach the target. I don't see any evidence that contradicts this analysis. What I did in the trading account is to lower the break-even level a bit, so that if the price suddenly retraces, I can still make some profit. Even if it is a small profit, it's still a bit more than zero, or worse, it's a loss. So in the worst case scenario, we are gonna make a little bit of money, but I guess we can definitely reach the target. So we just need to be a bit more patient, and let's see what happens next. I must admit it took quite some time. It took longer than I was hoping for, but we ended up reaching the target. So we got a 3.7x return, which is excellent. When you have this kind of situations, you just have to be patient and patient and patient, because we cannot pretend the market to do what we want within a certain time. There are traders who maybe if they don't reach a target within a given time, they just close the trade. I do not, I just let it go, because I believe that my initial analysis is correct. So I have confidence in my setups, I have confidence in my indicators. So I just let the trade go unless some technical evidence emerges during the trade that invalidates the previous analysis. But I mean, when you have a set target, when you have a set stop loss initially, and then you maybe have the opportunity to move the stop loss to break even, and then trim down the break even point to follow the price as the price moves towards the target, then you are more than safe to keep the trade open. But sometimes, like in this case, you just have to be patient, and that's tough. But I mean, if you are having troubles with having patience or not getting too emotional, just set your levels and forget about your trade. That's the best thing you can do. And when it's closed, you just look at your trading account and see whether it was a stop or maybe a break even, hopefully, or a target in the best scenario. So guys, I hope you liked the video. If you did, make sure to leave it a like down below. Also subscribe if you didn't already, and feel free to leave me any question or comment down below if you want. Thank you for watching, and I'll see you in the next one.